Let's get started with Upstart.
Great. Good afternoon. Upstart is a disaster. Down 60% today, as you mentioned. $4 billion of market cap has been wiped out, and it's still trading at about 6 times next year's sales estimates, which are likely going to continue to get marked down. The stock is a poster child for what can happen during regime change, like what we're experiencing now. Promising technology, blistering growth, and the potential for massive profits far off into the future work great in a negative real interest rate environment, and where that growth trajectory keeps moving higher. That playbook is over. We're in a new world. Rates are rising. The Fed's pulling liquidity. Investors should be looking for cash flows, earnings, and cash flows today. That's the name of the game.
Let's go on to another one where you could say there's a regime change. There actually is in the executive suite, and that would be Peloton. What do you think of Peloton? And is my favorite instructor, Cody Rigsby, safe?
My wife loves Cody Rigsby as well. But again, it's another example of the kind of stocks that worked well in the past couple of years, but are going to have a much tougher slog going forward. Peloton has a great product. We have one at our house, and I should probably use it a little more often. But again, we want current earnings, current cash flows, neither of which Peloton have. And its sales are actually projected to fall over the next 12 months. Now, the stock has already dropped 90%. They have a great franchise, a great brand. It's relatively cheap. But this is going to be a longer-term turnaround story. Could get taken out, but you need to have patience. And we think there are better places to deploy capital today.
Peloton shares down about 7.5% right now. Okay, Cliff, the final name is Sysco, not the tech company, but the food company.
The food company. Yeah, this name fits a little bit better with the kinds of factors that we're interested in currently. This morning's results, sales up over 40%, earnings per share up 250% with a nice beat and raise to boot. Love management commentary aligning with some of the other comments we heard from banks and credit card companies earlier in the reporting season, with consumers favoring experiences over stuff. We like that theme. Also nice to hear about management giving a nod to improving supply chain. So that's going to likely take a little bit longer to normalize. Not cheap. I wouldn't rush out to buy it on a 7% up day, but it could be a name to keep on the watch list if the broader markets continue to struggle.